Welcome back, everyone. We just saw Aaron do his first pre-market in London Open show, but we now have the Eurotrade, same show, different name. If you're here for the first time, my name is Diana Angelo, aka Marcus Stoker D, and I've been trading for about 18 years. 13 years out of that, I've been trading futures, specializing in some of the more unusual products. Now, since we seem to be having a bit of
Order filled
Tech Gremlin Mondays situation, can everybody see me? Can everybody hear me? It seems like we are going through just fine. All right, so fingers. All right. So my style of trading really asks for the market to create the initial balance, right? So to have that first hour when there's a whole bunch of craziness. Why? Because I look for some bigger chunks of the swing for the day, right? And those typically won't come in this early.
Order filled.
And this is why I like to really focus on, let's say, about the second part of the London session, sort of like 2, 3, 4 hours into it. So we decided to rename this and to call it the Euro trade. So that is, oh yeah, full screen. There we go. Thank you, Bruno. So that is the reason for the name change. I was always like, well, why are we calling it the London Open, right? It's the Euro session. So now we finally managed to kind of separate the two and to also come one step closer to TopStep TV becoming almost a 24-hour network, right? That is something that is a goal for TopStep. And I think we're now streaming probably 23 hours a day, which is pretty cool. And we decided we're going to bring some more content for our European and Australian friends. And that's where Aaron comes in. He is based in Australia, so he doesn't have to be up in ungodly hours to do this show. And it's just working out well for everybody. So, okay, let's have a look at what we have in the markets. It seems that we have another crazy day looming. It's just looming, but it does look like there's some gaps. Something interesting that's happened in DAX. Just want to quickly focus on this chart. We don't have DAX yet. Again, we're working on it, so stay patient. But last week, I actually put down, I opened a continuous DAX chart, and I saw that we had a 200 simple moving average on the price that's like 220,300, and it literally touched it. So we opened with a gap, went back up, touched that line, and then just basically bled straight through it. So caution, because all of the equities are actually starting to move again. So let's have a look. Now, I don't pay for ES on my live. ES is actually trying to reverse and fill that gap, but it looks very different from DAX. So from what I can tell, there's not much correlation between those two today. And ES was flirting with the 5% level. So be very careful if you're going to be trading in your XFAs and live accounts. Be super, super careful. Keep your eyes peeled on those numbers for equities in particular. Now, when it comes to DAX, if you're trading that on your personal brokerage accounts, it does have circuit breakers, but they're not publicly released. So, you know, nobody really knows what's going on. Now, I do have a little feeler copper trade here. So we're going to see whether there's some juice there. And let's have a look at what copper has done. Now, obviously, it's a huge downtrend, right? So let's start on the weekly chart. But we did come into some very large support areas, demand areas, however you want to call them, smashed through them, and then promptly just whipsawed back upside. One of the other things that I was looking at and analyzing while I was watching Aaron's show is just see where the levels are and how we behaved around them. So one thing that I noticed is that we had the GMT Open average daily range exhaustion, which is something that I use as a level, that came in to the upside at 431.25. And what tends to happen is when those are exceeded, on the back test, you can sometimes get these like continuation moves. It just so happened that we also have some really important levels that we have overnight VWAP. We also have the projected lower side of things from the options chain, literally right around the same area. So I figured I'm going to try catching maybe a pullback. And, you know, I'm not catching a bottom or anything like that. In fact, we're quite far away from that. But I'm just looking to see whether we can get some kind of a continuation trade. And also, whilst this little pullback was happening, there was not much volume behind it. So we had a pretty strong sort of Tokyo run, and then nothing. So now I want to see a little bit more commitment. And there was a little bit of initiation somewhere around 7:30 my time, so that's like half an hour before London opened. And since then, we're sort of kind of ranging, so it's not going super crazy or anything, not to say that it won't at some point. And this is why I'm in with only one micro. Super, super small. My entire risk on this trade is $75. But if we do start to get that move higher, the risk reward is much harder.
Order filled.
To the downside, at least the way I'm looking at charts. And I do have my very aggressive target, which on this chart doesn't look that far out, right? It just looks like there's a 15-minute chart. So if we can kind of get a nice push, we have some nice put supports. There were former put supports. That means a lot of put strikes were there end of day previously, around 450. So that's where my target is. So we'll see what happens. If they don't make it, they don't make it. It's fine. I'm absolutely happy to eat this one up and take it on the chin if it doesn't happen. But yeah, that's basically where my kind of swing sentiment lies, to go up and test the 350s, the 450s, and then to basically just smash back down again. So, you know, and yeah, sure, it can keep bleeding from here. But like I said, caution, because we do seem to have some irregular, outlier, abnormal moves, however you want to call them, already trying to initiate things. So it's going to be another interesting day in the light of possible trade wars. Okay, let's have a look. OHF says, hi to your question. Does the TopStepX platform have the ERA cloud or BLT trigger lines indicator? I have no idea what either of those are, like EMA Cloud. I suppose those are TradingView indicators. I wouldn't know. I'm not an avid user of TradingView. I do use it, but mainly to just plot my options trading level. So I don't know. Probably not. If it's a third-party indicator and you haven't requested it from the feature voting, then probably not. But you can always have a look in the indicators and then just try typing in what were those? EMA Cloud. So let's try. There's an Ichimoku Cloud. Can't imagine that's the same thing. And BLT. Yeah, that all kind of smells of third-party.
Order filled.
So no, we're not good. I can't find them. So I would have to say no. All right. I'm looking at the next question. I'm not even going to try and pronounce that because I know I will butcher it. So I'm just going to call you Din. So hello, everyone. Guys, as I understand today, it's not allowed to trade NQNES because the price is lower than 5% in previous close. It's kind of one of those key levels, right? If we dip down below the 5%, then yes. I don't know what Nasdaq is doing because, to be fair, Nasdaq is not one of my priorities at all, especially not this time of day. But let's have a look at where NQ actually is. And what the CME price limits are doing. It seems that half the time what we are answering is these CME price limits. So let's have a look at NQ. NQM, there we go, 7% price limit down is 163.21. So 16,321.25. I don't know why they put it in a quarter. It's good. 16,321. And 2% up from there. For now, we're still slightly above that. Now, I don't know the exact number here, but let's say ballpark 16,700 is where the 5% would be kicking in. But yeah, I mean, I really wouldn't be doing equities today. Maybe if they committedly stay above those areas, yes, but you won't be able to manage it properly, right? There's other things out there. Like, why are we so obsessed with equities? Like, you have gold, you have copper, you have, natural gas. You have that actually is not super crazy. It's gotten slightly expanded volatility, but it hasn't actually gone super insane. So that actually could be a good choice. I don't know what Dow and RTY are doing. That could be an option if they are not having the same sort of overreaction to trade wars potential. We have platinum. We have, RBOB. We have crude oil. We have like so many other things that are not under the potential price limits ban. And people are like, can I trade NQ now? Can I trade NQ now? Can I trade NQ now? Can we trade NQ now? Are we there yet? There are other markets out there. Use this as an opportunity rather than to moan that you can't trade equities. Use it as an opportunity to observe and learn some other markets. Okay? Gain some experience under your belt, right? Don't just go, I'm just an equity trader. It's great, but let's expose you to some other markets that are also moving, right? But they're not under the 5% ban yet. Not that they won't be. However, most of the commodities that I trade, they actually have a different circuit breaker. So I spoke about this a little bit last time. And I kind of had to remind myself because I haven't actually looked at price limits since COVID, so it's been a minute. But basically, they work on sort of like a rolling dynamic circuit breaker in a rolling 60-minute period. Now, for crude oil, that number depends on what they're doing with it. It can be like 3.5 up to 10% in an hour. So if that moves that much, then the dynamic circuit breaker is going to kick in. But until such time, and I do believe that copper, gold, platinum, they all have the same similar kind of thing, where they have a dynamic 60-minute rolling period where they monitor for a certain amount of price movement. So it's not like for the entire day. It's a different market, different thing. So yeah, instead of, complaining you can't trade anything, there are how many? 100 and something markets that we can trade on TopStep. Let's use this opportunity, right, to educate, learn, and grow, right? Grow as traders, get exposure to something else. Copper is a good one. RBOB is a great one. That tends to move quite a bit. All right, let's see. Bertie says, is it possible to trade without using market data on the dome? It costs about $50 a month. I'm not sure if it's worth paying when starting out. So if you're just starting out, yeah, you don't have to use it. In fact, I've seen and met many traders who never use the level 2. It's down to your personal style. If you're, there is a case for both sides of the story, right? So some people love looking at volume and underlying pieces of information that the futures markets do offer us. But there is also a case to say that volume and the orders that are transacted on the candle are pretty much in direct proportion to the size of the candles that you're looking at, right? There's a very high correlation. It doesn't always have to be that way because sometimes you have these thin liquidity moves that still have a large candle, but they inherently have no volume in them. However, for the most part, especially when it comes to, some of the commodities products, there is a very high correlation between the size of the candle and the volume that was done inside that candle. So do you have to watch level 2 data? You don't. But you have to be really good at reading price action as well. Now, I've done it both ways, right? I started off in Forex where you don't have committed volume. It's not a centralized exchange. And then I moved into futures where I suddenly had all of this extra data that I really kind of drooled over because I'm a nerd. And I love the fact that I could see what's happening under the hood. I always say I'm a little bit nosy that way. So the more that I can find out about like different pieces of information that can give me confluence, that's my style. But if your style is just to look for a 3-bar reversal around your level of interest, you can argue, do you really need level 2 data for that? probably not. And in that case, it's probably going to detract from the price action that you're seeing. So, you do you, right? So whatever you connect with, that is your style. We have TopStep TV where we have a varied amount of styles, right? So everybody trades differently. Even those of us who, for example, were mentored by Hogue, I still have my own twist and my own levels and my own way of doing things, even though I do take a lot of my concepts from Hogue, right? So he was the one who really deepened my understanding of profile. But that's not to say that Hogue and I are always going to take, the same traits. Far from it. In my eyes, it's actually a little bit more shorter term than what I look for. And then sometimes he's looking for a longer term trade, whereas I'm just looking for a scalp. So, so if you don't want to have level 2 data, you don't have to, especially if you're a newer trader and you find all of that really quite distracting and quite difficult to tie into whatever you're doing already. Just chuck it out the window, man. Absolutely. If equity market is bullish, I assume copper is also bullish too. No, they don't really, so here's the thing. Right now we have a bit of an outlier black swan type of an event where tariffs have been affecting products that generally wouldn't be necessarily correlated. So copper is now more used to protect from any kind of inflation. However, the trade war possibility and the tariffs that are introduced on copper actually have a potential to literally impact the supply and demand of copper, right? So this is what's causing it. Maybe it's not a bad idea to kind of familiarize yourself with the basics of the economy at times like these, because there is kind of like a bird's eye view picture. And if you're not fully aware of kind of how that affects the market, maybe you can read some books and then see what happens, right? But there's no real, how would I say it? There's no real replacement for you sitting there, turning up and doing effectively a walk forward learning process. Seeing what we have now, how does that affect price? Is it going with it? Is it going against it? But copper went to well above $5, right? So there was this liquidation moment. When was that? That was it was around about the highs. Was this it? Or did we go higher? I think we were higher up than that. Let's go up to a 1 hour time frame. There was a liquidation event that looked to us, all of us who have been seeing these. There it is. So here's this weird spike that happened at the weirdest time of the night. It was 1 a.m. and it was massive. And then since then, we managed to put it atop. Now, was this an institution blowing up? We can't know for sure. But it certainly looked like somebody got liquidated with deep pockets, somebody who was in on maybe short copper from much, much lower down, and they got smacked in the face. And since then, we just haven't been able to find any committed reversals. And then we had the trade wars stepping in. So the tariffs, the T word. So what's going to happen with copper long term? Well, some people have said that they started using copper on an institutional level as a protection from inflation. Do we feel that that the inflation might go completely crazy due to the tariffs? Maybe, but nobody knows that.
Order filled.
So right now, I'm just trying to stay really, really objective and to read the technicals that we actually have. So what do we have? We just have a low on the weekly chart where previously we found some buyers. So there was a classic liquidity grab and a smash up. Is it going to hold? Again, we'll find out together, right? It's I don't have a crystal ball. So yeah, but copper and equities, if you look at ES right now, it's going up. Does this look correlated to you? There's a 30-minute chart, 30-minute chart. How correlated is this? Not much, right? It's a little correlated, but then everything has been going sort of the same direction. And this is the nature of black swan events. I know, like I said, some people were arguing to me. They're like, oh, it's not black swan event. Tariffs have happened before. Really? Really? America's had, 47% tariffs to certain countries before? Really? Okay, then. I must have been living under a rock when that was happening. I don't know. Because, last time I checked, this has never happened before. And here we are in, a complete sort of bleed. And,
Order filled.
Across the board. And if you were here for COVID, we had something similar happening. Everybody was like, oh, gold is going to go up. Gold is going to go up. But gold actually never went up. It actually went down during COVID, while the equities were also going down. So it's what gives? Why is gold falling? It's semi-apocalypse, gold is falling. What? So a lot of people who subscribe to the portfolio theory, traditional portfolio theory, they were kind of scratching their heads. They were like, why? Why do we have equities and gold correlating nearly 100% together? What's happening? Twilight Zone. So be careful with those correlation during outlier times like these, because this is not normal, right? This is an outlier event that we're all living through together. Very interesting, super interesting. I am actually happy to be able to have seen 4 black swan events since I started trading. They're never comfortable, but also in chaos there is opportunity, to quote, I believe that was Winston Churchill, correct me if I'm wrong. But yeah, so anytime somebody is saying, oh my God, we can't trade these, and yes, that's true because some rules on equity say on TopStep that we can't trade within the 5% on equities, but there's other markets, right? And they're also moving. I did a pretty good natural gas trade the other day. That was in a very small size. And I'm going to keep doing that this week, whilst we try and digest whatever the hell the tariffs are trying to do and how how we're going to adapt to this this volatility. Is it here to stay? Is it just while, we get used to it? Nobody knows that. So I'm watching my ranges. I am, watching what the options are doing. If you hear barking downstairs, that is one of my dogs who is being absolutely pathetic. He's just in a little bit of a tough situation right now. But yeah, so that's why he's making noise. He really wants to be up here. But he's not allowed because he opens the windows and he's just generally ridiculous. Currencies are moving. What is your opinion, Joe says? I haven't really traded currencies since about, I think last time I popped in a currencies trade was probably 2017, 2018. And that was in GBP New Zealand dollar. I'm not sure I pay for currencies either. So let me see. No, so I wouldn't be able to do that on this particular live account. When people say currencies are moving, back when I used to trade them, they were really liquid, right? We had Euro, USD moving like 150 pips up to 300 pips per day. But then we sort of dried up during European austerity measures, which is how it went into futures, actually. And they were moving like 40 ticks a day for years, absolute years. So let's see if I can find some currencies. Let's start with the Euro, because that's pretty popular. Are we in June now? Let's see. Okay, let me find the current contract. Where would that be? Where would it be? Breaking the musical here soon. Let's have a look at continuous contracts because that's the first thing that caught my eye. And with very bright lights, it's a bit tricky finding these. All right. Let's have a look. Yeah, euro has moved. You are right. It is back up to 121 ticks for the London session. Yeah, that could be interesting. Am I going to trade it? I don't need any more things in my arsenal. And frankly, with the currencies, because of the huge dry up of 2012, I just have a bit of an aversion to the currencies these days. It's just a personal preference. It's nothing, nothing to do with your decisions.
Order
filled.
filled.
I think here we are kind of in a bit of a holding pattern here. So not too far away from VWAP. We did exhaust the average ranges, so let's have a look at what side did they exhaust. So upside. Again, similar situation in copper, the reason why I took this trade that I'm sitting in. Yeah, so the ADR got exhausted to the upside. And actually, euro is opening inside value, but they're having trouble around the initial bounce low. So that would maybe be like a short. Let's have a look at what's going on the daily chart. I just want to see whether there was anything interesting. I mean, I'm not that keen on this big time frame because on the daily chart, we look like we're like in this range. And the range is sitting right at the swing extreme from a very, very large time frame. So, yeah. Volume profile, POC from like 4 weeks worth is all the way down to 108. But something that's interesting to me is that we haven't really like moved from some big levels. Yeah, so this is what I don't like about the euro, even if you look at this whole thing. So I don't want to label. The hell. If you look at the composition of these candles, it's like spiky, spiky, doji, spiky, bearish, spiky, spiky.
Order filled.
Every time I see that, it's like it's so difficult to trade because remember I try to catch larger swings, and yes, I will scalp if the day calls for it. I'm not just going to be looking for massive trends all the time. I'm very flexible that way. But the problem is when there's no decent sort of direction, my system would call for only getting involved in and around the swing extremes from like lower time frames, taken from the larger time frames, but slightly lower, so like a 4-hour chart, and then to try and get effectively shorts from somewhere down here or up here, and then longs from the demand area, right? So that would be, that would be something to consider. But I hate doing that. I will be honest. Range-bound markets are still not really something I'm super comfortable with, nor do I enjoy it. Why? Because it means I'm going to have to trade more, and in a way, when you trade more, you increase your risk, right? So the more times that you enter, the more times you risk your capital. I would prefer to be on a relatively smaller size with a bigger stop and then catch one big trade that I can kind of track throughout the day. It's less exhausting on the mental capital. And don't get me wrong, when I was younger, I traded bigger. I was, a lot crazier, scalped a lot more. But then over time, reward versus like the actual money versus the mental capital side of things, it just stopped making sense to me. So I worked very hard to move almost completely away from scalping unless we're in a really kind of modest range. Modest range that's not too big, not too tiny. And then I basically do my swing trading. I use a 30-minute chart for that. And I typically want to see that the initial bounce is pumped to both sides. So we have like that double-sided extension. Rank says, or maybe not trade, go back to bed. Yeah, that's always a possibility, right? And he goes, or they go, that's actually my problem. I get bored and just trade, which is when I get into trouble. Yeah, so most people trade out of boredom. I haven't really had that for a very long time. Like if I don't see anything, I will actually just do other things. Like I'm not going to sit here and go, I need to trade today. I have to get my daily fix. Well, thank you. Otherwise, I go through withdrawal. I don't have that, right? So if there's nothing to trade, I enjoy doing other things, right? I go hang with the dogs. I go paint the wall. I go, do anything else that will keep me engaged and away. And I don't even think about the markets. And trust me when I say this, I have a massive passion for trading. Like if the name of the game was to just sit and click buttons and be always profitable, that would be great for everybody, right? But the reality is the more that your skills grow, the more selective you get over the types of trades that you take, and then you want more rewards for your efforts. So if I do engage in the trade, if this makes sense to you, I want that trade to be at a place where it makes sense to get a bigger swing intraday. Okay, this is why I like my exhaustion zones, put supports, and call strikes, call resistances, because typically those areas have more legs to bring you that big swing, just speaking statistically. But scalping 190 trades a day, that's like that would be like another version of hell. McDeegs says, Heidi, what trade do you currently have here? I have a copper long, so it's just a sort of punt trade, 1 micro, very tiny. So basically, I'm looking for copper to sort of continue towards the former put support at 450. Why do I keep saying 350? 450, which is where I would expect to see some more sellers. Now, could this just bleed through it and stop me out? Yes, we'll take this on the chin together. I'll take one for the team. But at these levels, we have overnight VWAP. We have a reaction on a 1 hour chart that was pretty strong prior, that exceeded the average daily range high, and then carried on, retested the area, and now seems to be having some trouble around it. So basing my hypothesis on all of these things, there's also a couple of other stuff, a couple of other confluences that I'm seeing, and that's the fact that we also have the projected options volatility in and around this same area. To me, that's a lot of confluences where it might be problematic to keep going down. So order filled down because one piece of headline news that's not so good for copper, and it's going to smash through. That's why I'm in with 1 micro. So even if I get some slippage, I can absorb that. I'm not going to be sitting here crying that there's a blown account or something. But yeah, just all of the ways that I'm analyzing the market from a larger time frame point of view. We also have some sort of bottom of the range, and that's exactly where this came from. So we'll see how this plays out. Usually around about this time of day, we're still a little slow, but including myself, without any caffeine. Obviously, joking aside, copper starts to move into the overlap the most. So you have the Tokyo session that is pretty lively, and then you sort of have this muted 2-hour weirdness during London. I don't know why it happens, but they sort of take time to get going. And then as we're nearing the overlap of USA and UK, suddenly they start to increase volume. We see more commitment in the trade direction, and that's kind of what I look for. Now, one positive thing here is that we extended the initial bounce to the upside. The thing that isn't positive is that we came back into it, but still we're finding buyers above VWAP, right? So we keep finding some buyers here. So this could be just a shakeout of the existing orders before they kind of clear the way to go higher, or yes, it could be a continuation as well. But where we are right now, until we're actually strongly through VWAP, I don't want any shorts. And if I'm going to short copper, which might happen later on in the day, I want to see a couple of possible things. We either rise up, order filled, and then we can reverse higher, or we bleed through VWAP, and then once the COMEX kicks in, we continue that move through VWAP with quite some volume. But that is going to be another trade, another session that doesn't really have much to do with this session, right? Sometimes it does. Copper can be very directional. So once they pop the initial bounce during London, that sometimes, quite often actually, tends to mean that's your direction of the day. But copper is very directional, very directional. You can see it. It's just relentless. Once it picks a direction, it's not that you won't have range-bound days, but it's definitely one of those products where if you're going to look for a reversal, you better be at the right time of day. You better have something going for you on the long time frames as well, like very large time frames. Don't just willy-nilly go into copper reversals because it will punish you. And every time I see a reversal in copper, I'm like, really? I'm always very suspicious towards it. In these sort of markets, I just want to say, you have to be on the defensive. You can't be on the offensive because that's what blows up accounts, right? So you will see that everybody who's been trading for a hot minute, we will always be saying, be careful, size down, slow down, make sure to cut your losses early, pick your trading locations carefully. But I'm going to say pick the time of day when you're going to initiate your trade carefully too. Because you get involved during the very volatile time of day, you might be right on direction, but you won't have enough equity on the day to actually absorb whatever is going on, the ranges, the craziness. This goes for gold, NQ, and sometimes you can even have things that generally don't go super crazy. During this time, I would expect to see some outlier movements there as well, right? So be very careful. Don't blow up accounts over this. Use it as a learning opportunity and become more of a spectator than an active participant if you don't know what to do with these, okay? If you've never seen something like this happen, if you haven't traded through COVID madness, if you've not been there for the credit crunch of the 08, and if you, like me, and if you haven't, that's actually when I started. And then if you haven't seen the austerity measures and what sort of these unexpected events can bring, I would just sit back, open up a practice account. Journal. You don't even have to trade. You just go, okay, so seeing for now, ATR on copper is 54 points. That's quite massive last week. And the week prior to the trade wars, it was 18. So that's a huge increase in volatility. Some data points that you can use in the future to see how the market is behaving, just purely from a data-driven perspective. And if you've done some trading and got yourself into trouble, that can go into your emotional trading journal. But please don't do the self-deprecating behaviors, right? Don't go, was a Muppet trade. That serves no purpose, and it will actually cause you to have even more self-limiting beliefs than you already have. Like, everybody has self-limiting beliefs, but that sort of negative self-talk can really impact your results because you start to believe it. You say something to yourself enough, and you will start to believe it. But in your emotional journals, you can say, I tried to go long on NQ, but very soon they took out my stop. That triggered me, and I started entering another trade and another trade and another trade. So in the future, instead of kicking off another trade that caused a whole bunch of the domino effect that happened that led to tilt and blown up accounts, why don't you say to yourself, next time when I lose a trade, I will do my best. I will put the lockout button for like the next 15 minutes to cool myself off before I even execute a new trade, because this was a trigger. So you have to keep track of those trigger moments that cause you to go and tilt. Not enough is talked about this. Okay, this is why we have Jerome now on Wednesdays. So we're making Neuroscience Wednesdays, where you do keep track of it. You're almost like interrogating a person, but that person is yourself. Like, what did you do when this happened? Like, as if it's a crime scene, right? Did something wrong, let's see what happened. And then you're interrogating yourself. It's like, well, what were you doing when NQ was breaking the lows? Where were you? And you go, I was short. Okay, and then what happened? Well, I had my stop pretty close, and then it hit me, and then I just lost all control. So I went on a bit of a stabby into the P&L, turned into Jack the Ripper for a second there, and ripped up my account to shreds. Respect your account, respect your P&L, respect yourself at the end of the day. But that's sort of a inner work, introspective approach will serve you much better than writing in your trading plans, lost control. Like, why did you lose control? What caused you? Like, get to the root cause of why you lost control. And the next time it happens, be aware. It's very hard to do, but the next time be aware that something happened and you're like, here we go again. I did this last time. How did that end? Not well. What can I do differently? That sort of analysis is going to help you more than any level, okay? Very important. And during these times of crazy volatility, it is very, very important to do this. Where is the percentage so we can see the 5% on your screen? Can you show us an example? So I have it on my other platform, but I think it's in measuring tools. Price range. So if you have a reference point from ES and from the price limits listed on the CME site, if you got to drag something from a point, let's say copper, let's drag it from the low, and then you can see that this tool will actually tell you the percentages, right? From the top to bottom, and bottom to top. Yeah. Will I sing for you on TV? Do you know what? I haven't sung properly for so many years. I'm probably quite out of practice. I know that I still sound okay whenever I do my little, but proper singing is a muscle, and proper singing requires strength. Unfortunately, at the moment, I'm kind of battling some health conditions, and that means that my energy is just really shit throughout the day. So if that ever improves, I'll be able to practice singing again, and then I'll be more comfortable singing. But until then, you can expect, like, every so often, I might do like a line or two, just, spice things up. But generally, I wouldn't be... It's like an athlete, right? If you are somebody who performs at a high level and then you kind of get injured and you don't practice for a long time because you're in rehab and recovery, you're not going to be the top athlete anymore. So that's the way I look at music. If I'm going to perform for someone, I want to give them the full respect that they can expect a good, enjoyable performance, rather than somebody who hasn't stepped in front of a mic or in front of a guitar or a saxophone in about 6-7 years, right? I always try to turn up looking pretty presentable. That all just stems from me being a musician, and that also means that my performance, especially on the music side, really needs to be top notch. I have full control over that. Trading is a little bit more of a random situation where you can perform the best, but if the market doesn't do what your plan wanted you to do it, that's another problem altogether, right? But music, I can control that. Bertie says, I'm so bad on tilt, I hate it. Dee, did you ever suffer from tilt? Well, why do you think I know so much about it? Of course, anyone who's traded for any length of time, you would have gotten tilted. It gets annoying, right? And then when you don't have the confidence and the experience to figure out why it happened, it irks you even more. And then you just go, I'm going to get you. And then the only thing that you get is a drawdown. So very quickly you kind of learn humility as a trader. There's some of the reasons why a lot of us have been doing this for a long time. We're generally pretty humble people. We're not like, I'm the best trader on YouTube. Let's go. I don't do that because no one is the best trader. You have pretty decent traders, but everybody goes through a period of drawdown. However, some people who have problems with egos, their P&Ls will reflect that. They will be up and down, like the Australian states, like the horse drawers. But the gist of it is that if you don't learn from those experiences and you continue to battle your ego, that means you're forever going to be inconsistent. Yes, sure, you're going to have some good months, but then you're also going to have some terrible months. Absolutely terrible, terrible time. I try not to be too dramatic in my trading. If I'm in a drawdown, I will do a slow bleed, right? If I'm smashing it, it's also not going to be like one day making, 60 grand, another day losing 20 grand, and another day making 100. Like, my trading is generally not that dramatic. It's just like a little bit up, a little bit down, a little bit up, a little bit down. But generally, you try and keep it stable. I don't like a lot of variability. I've coded mechanical trading systems, and whenever I see a system that has a lot of variability in it, I'm always disgusted by it. I was like, oh God, that would be so uncomfortable. So from that point of view, do I go and tilt these days? Super rarely. Super rarely. There were times last year when crude oil did make me a little annoyed. Did I go and tilt? I didn't go and tilt, but I was like, not really happy with this. So it wasn't tilt. It was just like, what is going on with this market? This is not, this is not the same market. That's what was going through my head at the time. I'm going to close this early and take the hit of whole $53 because we are, and there it is. I can see that happening.
Order filled.
With commissions, that's a little bit more. But that's absolutely fine because we're now getting that strength through VWAP, the thing that I didn't want to see, but the thing that I did want to see for later on. Right now, we have a neutral day type. Okay, so neutral day type means that we have extended the initial bounce.
Order filled.
Let me put that down. And that means there's nothing for me to do here. There's no setup. Why? Because this is the 30, this is a 1 hour chart. Okay. Because if I'm going to run a directional trade on copper, I do not want it extending the initial bounce to both sides. That decreases the probability of this kind of just keep going. It's not to say that it won't. It's just statistically, at any point, this could whip back up. I also don't have any levels here anymore. So now, this is a dangerous setup that doesn't match anything. We're getting strength through VWAP, but weakness through VWAP, but we also have a double-sided extension. That's a no. To me, this is a C setup. If we had continued higher, that would have been kind of like a B setup for me. Because again, we were a little bit too far from things, but VWAP can be very reactive in this market in copper. So early exit just before that big smash through, no problem there whatsoever. And now there's nothing else for me to do. It's like literally now we wait for the next session and we wait for the next market to actually show me the way. So this is where somebody who hasn't seen this, doesn't have a plan, they'll be going, oh, I lost, but I didn't lose. I actually made a decision to exit early. So this didn't hit my full stop, right? That's a very different mindset than when you go in, your stop loss gets taken out. It's almost like you feel like the control has been taken away from you. That's a big problem for some people. But for me, it's just like, I really don't get bothered by losses. I couldn't care less at this point. And I certainly couldn't care less somebody coming on and going, no, you lose. Yeah, I have 43% accuracy.
Order filled.
A lot. Is there a website that lists ATR? For ATR, which is like the average candle, you have that as an actual indicator. A DR and a SR as levels, that's a dynamically tracked measure. And from what I can tell, we're the only one. That's my concept. I started using those as levels. But I see a ton of trading view indicators that try to emulate that, and they emulate it wrong. Why? Because they don't actually know what it is that I'm calculating. So the only place we can find it is the block indicators at the moment. But the ATR directly, the one that just measures the candles, there it is. Average true range. That's actually this line that I have down here. Can you see that? This one down here, that's the ATR, right? Program effect says, D, last week I made 7,400, and instead of giving confidence to me, I'm kind of scared to lose it or not performing as I would expect. Last week I managed risk to follow my plan so well, what to do? Size down, 1 micro. Put a trade limit on. Number of trades. If you do a certain average of trades per day, put that as a trade limit. Put your personal daily loss limit at $300 and lock up your settings. Because at times when you're malfunctioning, you cannot be expected to kind of just keep keep your discipline. Because it's not a discipline thing. This is what I've been trying to say to people. Oh, I like discipline. You don't like discipline. You have a problem with fight or flight response. Those are two completely separate things. You can be the most disciplined person in the world. You can be somebody who goes to the gym every single day. And you're super good at your nutrition. And you're very good at tidying up your house all the time. It's like, you can be a very disciplined person, but you start to trade, all of that goes out the window. Is that a discipline problem? No. It's a problem with you managing your expectations, your confidence level, or lack thereof, and then going, all right, so now I've made this. I'm not quite sure how I got there, because I think that's the problem. So when I say confidence, I don't say confidence in your P&L. Confidence in your trade setups and statistics that are connected to your trade setups, okay? So, for example, you say, I made 7,400, and you say, I followed my plan, but I'm afraid to lose it or not performing as I expect. So what is that? It's the confidence that the plan you used last week might not work this week. Immediately, lack of confidence, right? Also, you almost kind of don't believe yourself. It's like, well, will I be able to perform? That's also lack of confidence, but it's not necessarily a discipline problem, right? So just in those times, that's why you have the risk tools. Lock yourself up. Hell, even go down to 150 daily loss limit, right? Try it a little bit. In these markets, 1 micro is plenty, right? Plenty. And then if you get a few base hit days, $100 there, $200 there, you will keep the 7,400 and you will add. You will be super surprised how much smaller days add up over time. It's the overtime that people don't like. It's like, what do you mean? I want to be rich yesterday. But, we have to slowly, we have to learn how to crawl, then to walk before we run. Difference between the opening range and initial balance, please answer. Tekka, opening range is anywhere from 1 minute to about 5 minutes, although some people use 15 minutes. The initial balance is the full first hour, so much, much bigger time frame. Usually the first hour is set where the market makers are most active for the day. So a lot of HFTs, a lot of liquidity grabs, a lot of gains without particular direction. Because remember that the market makers are not looking for any particular direction. They're just there to create liquidity, right? So they're not going to be positioning themselves for the next year or 3 months, or hell, even for the next day. They don't care about that. All they want is to generate liquidity. The way the market making works is that they give you a certain amount of volume, let's say 1,000 contracts. You sit down and you're like, I have to do 1,000 round turns today. Are you going to be doing swing trades on 1,000 lots? Probably not. Probably you're going to be doing many smaller trades. Now, these days, HFTs have been replaced by the machines. And the machines that do that cost a lot of money. I mean, a lot of money. We're talking millions and millions. So don't even try to fight them. I absolutely despise trading during the first few minutes.
Probably not the greatest trade location for this trade, but opening range trade. If you don't take it, you don't get it.
It's always the one that you don't take, right?
That's absolutely right.
Usually. Yep. Usually that's how it goes.
Well, we will continue to monitor a lot of action overnight. We saw equities take a nosedive early on, gapped open across the board, sort of trading back to the upper end of those gap opens. Still haven't closed any gaps in the S and the NQ. I think the Russell closed their overnight gap, but ES, NQ, and Dow have not yet. We'll get into that a little bit later when Ho gets into charts. But we got some stuff happening on the economic calendar this week, too. Eddie, what is happening on the economic front this week? What do we got to look forward to?
Taking a look here at Eco today. Now, I know that we had some stuff coming out earlier. Not really too much. Obviously, we don't have a 7:30 here, but we got a 9 o'clocker coming in. We got the employment trends, and 9:30. FOMC Kugler is going to be speaking, hopefully in English, so we understand what they're saying. 10:30, 3-month, 6-month bill auction. And a little later around, I think 2 o'clock, we got a consumer credit. But light on the economic front. Back to you, JD.
Thank you, Eddie. And we get the FOMC minutes coming out on Wednesday afternoon. That'll be a sort of a calendar highlight for the week. Consumer confidence on Friday, University of Michigan consumer sentiment, and a couple of other talking feds sprinkled in throughout the week. So, decent economic calendar.
Thursday and
CPI,
Friday,
PPI, yes.
Well, that's gonna be a big.
I knew there was a big one. I was missing. CPI, PPI. CPI Thursday, PPI Friday.
We are kicking off earnings season at the end of the week, too. Some of the bigger banks are releasing their earnings. JP Morgan, BlackRock, Morgan Stanley, and Wells Fargo all releasing Friday, marking the beginning of earnings season. It could be an interesting one. Hope everybody's rested and ready for this week. I know a lot of fun hanging out with Jay last night for session.
Oh, yeah, you guys put on a nice show for the reopen.
Yeah.
So trading that reopen, Hogue, gap down. Unfortunately, I was out of the house during that 5 o'clock hour when the reopen happened, so I didn't catch. I only caught the last couple minutes of it. But when you saw that gap open, what was the immediate reaction? Sit on hands, do nothing. Yeah,
JD, there was like 10, 15 points between bids and offers. It was so thin. Looking at the Nasdaq Dome now, there's a 362 lot on the offer at 17,049. 362 on the offer. Seeing some size there. Order filled.
Interesting. 17,049. All right.
Order filled.
Down. As far as our 5%,
right up to it, but no fill yet.
I know we have our guys in the chat posting 5% limits and circuit breakers. I'll just sound those off for everybody right now. S&P 5% move will take us down to 48.55. Nasdaq 16,662. Dow 36,603, and the Russell 1747.40. Those are your 5% price limits in the equities for today. 7% circuit breakers.
You were down there last night, JD.
We did. We dipped below those 5% marks early on, real early on, and have since recovered from there. We've got the I believe the ES is right around weekly kickoff low. Yeah, we got weekly kickoff low 49.88. Been kind of dancing around there in the S&P for the last couple hours. Sort of flagging right now. Looking a little bullish. We might come back and close this overnight gap. That would take us to 50.74. We'll take a look at that when Ho gets into the charts, though. Checking back in on this gold trade. No love
5%.
from gold so far.
Nothing yet, huh?
I'll
Look at that
break it down a little
5%.
bit.
I'm calling that the top step effect.
Top step effect. As soon as we hit that
Top
5%.
step effect. Yep. When we get to 5%, everybody at Top Step
Order
stops trading
filled.
it. Market's always looking for volume. If there's no
Order
volume
filled.
there, it's going
Right.
to find support there.
Mm-hmm. Yeah, makes sense. We're getting some weakness in gold here. I think this trade is toast.
Toast.
Should have listened to Hogue. CUA 3042.60. 5 full points. We're toast.
Where's the
is.
jelly with that toast?
Toast.
5% rule does not apply to combines, folks. We talked about that extensively last week. 5% rule does not apply to trading combines. Only funded level accounts here at TopStep.
Like, really? Unbelievable. Actually.
Come on, buyers. Get back in there.
Come on. Step in. All right. No 7:30 numbers this morning. So
Nope.
we'll give this trade another minute or two to play out. We'll run through some charts. Oh, news, Eddie.
News.
Stories for us this morning.
You know, I was just
What's going
taking a
on?
look here and checking out. There is a phone call. There was a phone call earlier today here with the White House. Navarro's going to be speaking also. I think.
Look at now. Okay, he woke up.
Yeah, the Trump and the Japanese Prime Minister phone call earlier today. Take a look and see what's cooking on that. But as far as news goes, U.S. stock futures slumping today as the Trump administration maintained faith with its tariff plan on most of its key trading partners, despite the two-day historic stock market rout. The S&P traded 26 points lower. Nasdaq fallen about 123, and the Dow also down 123. ABC. U.S. President Donald Trump said Sunday that his trade tariff were only mean to cure massive financial deficits with the likes of China and the European Union. Concerns are growing that this trade war will hit global economic activity, including the world's largest economy. Our friends over at Goldman Sachs lifted on Sunday its odds of the 2025 recession to 45 from 35% a week ago. That's after hiking its recession forecast last week, citing a sharp tightening in the financial conditions. Foreign consumer boycotts and continued spike in policy uncertainty is likely to depress the capital spending by more than we had previously assumed. This is coming from Goldman. China retaliated last week with announcements of a 34% additional tariff on all goods imported from the U.S., and this week could see similar moves from the European Union. Also, the European Union's considering imposing the first wave of retaliatory tariffs around $28 billion worth of U.S. goods, and they are currently at 25%. And this is going to be beginning Wednesday. Nearly all of their exports on the U.S. will face a 20% tariff. And that's what I've got so far. We get to crude. I got some crude coming up before we hit that. But goodness, having a week off and seeing crude at $60. What happened, guys? What'd you do?
It was down
on
8%
4-year
one day,
lows.
Eddie.
We haven't seen
Yeah.
these crude prices since 2021.
My God, man. It's crazy. Lunacy.
We should be
But,
seeing
yeah.
it at the pump pretty soon, too. Well, we just got a pop in
How about
gold.
you
Came
guys,
back to
but-
our entry price. Came right back to the top of the opening range, and now we're trading right back in the middle of the
Right back in.
So it gave us an opportunity to get out. We didn't take it, and now we probably are toast on this trade. We'll see, though. We're going to look at the crude oil opening range trade. 1 minute opening range in crude starting at 8 a.m. Central Time. We're going to some charts before that. Hogue, Coach Vince, anything you guys want to talk about before we start getting into charts? I think we're about to get ticked out on this gold trade right now.
Ooh. Did you look one tick below there? One tick below the opening range. See if there's any stops down there. Where are we?
We're right at 42.60.
Yeah, we're liquidity now.
Yeah, we are. We'll just wait for this. Any update says have faith. So much for faith. We are out. I was count stopped out.
Okay.
Gold
Do the
opening range
George
trade.
Michael.
All right.
We will take a look at the crude oil. Again, we'll take a look at the crude oil opening range trade at the top of the hour, 8 o'clock a.m. Central Time. We'll look at the 1 minute opening range in crude also. All right, fellas.
All
What are
right.
you looking at in the world of the charts?
All right. Well, Vince, I guess I'll start. We've got the weekly in the E-mini S&Ps. 200 session moving average was touched last night. We also touched that 5% rule, that 5% level, the top step effect in play here in the S&Ps. Obviously, the market state has gone from grinding to the upside to falling to the downside. Lots going on. This is the weekly chart to just to kind of get a bigger overall look at things here. As Vince and I both pointed out on the daily chart, we do have the death cross. The 50 session has moved below the 200 session moving average on the daily chart. Dun dun dun! I always, when I say that death cross, like some sort of eerie kind of sounds, but when we look at Thursday and Friday's price action, it's just all mostly candle bodies, very little candle wicks at the extremes, very strong move to the downside. When we look at the volume, especially on Friday, just absolutely tremendous. We added an additional 71,000 in open interest on Friday. That is new selling coming in. That is not long liquidation. For the Thursday and Friday sessions, it's approximately 137,000 new open contracts to the short side. Sellers, new selling coming into the marketplace. We've been looking for the longer time frame traders to enter into this market. They have entered into this market in a pretty big way to the short side. Don't forget, they are always hedging. They're always hedging. They're just adjusting inventories, and that's what we're looking for them to do, and especially anywhere near weekly kickoff levels, which we are currently hanging kind of around a little bit here. So the death cross, we got everything there. I'm going to take a quick look at the 30 here, Vince, and we'll see what you've got on your mind here.
Sure.
So we got that 49.88, which is 20% off the all-time high in the S&Ps. Really, that's the main reason that I've put the opening that the weekly kickoff level is there, is that 20% off the all-time high in the S&Ps. I mean, that's really bear territory, or are we going to recover for it? It seems to feel to me like it's now or never. And you can never say never in futures. I mean, anything can happen. ACH, baby, some 100% absolutely true. But looking at the 30-minute chart here, overnight inventory, we're flat. There we are. No real overnight inventory. We are opening with a gap from Friday session. So if we can't close the gap relatively early, that should tell us, well, maybe we're going to continue to accept lower pricing. The 5% off the settlement price, the top step effect, worked very nicely, actually, here in the S&Ps. 48.54 is where I've got that. I think JD's got it at 48.55. Nothing finite in futures trading, of course, but really somewhat range bound inside of the overnight range, again, with a gap. Is the gap going to close? Is the gap not going to close? Are we going to get back into value from Friday, which could provide a pretty decent value area special situation play? Maybe I'll let Vince talk about that a little bit. But opening, no overnight inventory with a gap. Gap rules. We can't close the gap relatively early. We're looking for opportunities in the direction of the gap. Vince, your thoughts?
Yeah. So, like you said, we got the death cross, and I'm hoping that this market gets resurrected on Easter Sunday. This is nuts, but
I get that.
Yeah, so
I got that one. Yes.
So here we go. We opened a huge gap last night. We were down 5%. I opened up my charts last night, and I looked. I was like, "Oh my God!" I thought we were heading for a limit down this morning. So thank God we're up here. Like you said, the top step effect, right? 5%. Everybody's done trading, and markets can't continue. So that's a good thing, right? But here we are. like you said, we have overnight inventory is technically short from Friday, and we have settlement up here at 51.1025. Look at all that open interest that came in, Hogue. I mean, 72,000,
Huge.
71,000, all to the short side on increasing volume. The auction is strong to the downside, but with that comes tons and tons of shorts, right? And when shorts have to cover, what do they have to do? You got to buy, right? So, I'm hoping we don't continue this downside, right? But we do have a gap. If we get back into settlement, value from Friday, 51.1750. If we could gain acceptance in there, I could see us rotating up here to the high of value, 52.35. And then we also have a spike base way up here and settlement from back on April 3rd. So if the sellers decide to jump out, we could get a tremendous move way up here to this spike base settlement and clear all this area, which would bring us from 54.44 quarter way up there. Downside, I don't know where we're going. I had a couple levels. I don't have it in front of me. I should have wrote it down. But on my tops of daily levels, I do have some levels to the downside. But I'm hoping today we get a little bit of a breather. They've just been hammering the market for 3 days straight. And usually you'll get some sort of short covering, right? So I'm hoping we get that today.
Relief.
Hoping for it. Let's all pray.
All right. Let's take a look at the Nasdaq now. As always, starting with the weekly. Weekly, let's get these moving averages up here. So there's that 200 session moving average. Really came in really right at the 5% level, 16,662. Obviously, the upside market has broken. We are now in an auction to the downside, and as Vince mentioned, this auction to the downside is presenting as very healthy. We've seen a lot of volume. We've seen a lot of open interest coming in on those last couple of days here. Again, this is the weekly chart. Upside market auction ended, and a new downside auction has ensued in the longer time frame. Daily chart, of course, we know that the upside auction has broken, and we have a downside auction that is continuing to try and push to the downside. And as Vince said, this auction is healthy. It is a pretty healthy downside auction. When we look at the volume at lower pricing day over day continues to increase. This is something that happens a lot during down markets, maybe not so much on strong up markets, but when we're looking at fear coming into the market and a capitulation type thing, that's when you're going to see all the volume come in. Friday, we added 13,000 estimated open interest to the downside. That is new shorts. Between Thursday and Friday, that's 33,000 new contracts, new sellers, new shorts coming into the market. And that is, again, as Vince said, that's healthy. You're seeing lower pricing showing acceptance through volume as well as open interest increasing to the short side. That is a healthy downside auction. Here's that death cross we saw last week. 50 session moving below the 200 session. You look at the 30. Whoa, hey, whoa. All right. So again, overnight inventory. So you can measure overnight inventory from settlement, because there was a lot of selling that came in between settlement and the open last night. I tend to look at where the market opened the previous night, and so last night that's where we opened. That's where we're sitting. So is there overnight inventory to the short side off of settlement? Yes, probably to a degree. But where we opened last night and to where we are now is flatline. So I'm kind of discounting any real important overnight inventory at this point. Again, opening with a gap rules, 5% top step effect. Last night, I think Jay and I were both saying, "Oh, this is going to lock limit." It was so thin and so whippy. And we were like, "Oh my goodness, this is going to hit 7%," and it just never did. It just,
I thought so myself.
Yeah, right. So
Yep.
the Top Step effect. We are 25% off the all-time high in the Nasdaq. Bear market territory, ladies and gentlemen. Measured move takes us down to 16,118, which is the weekly kickoff low. Below that, 30% off the all-time high, 15,870. Could it be? Could it be? No, let's not do that. Let's like have all these things straighten themselves out. Let's recover. I want to take another look at my 401k sometime soon, but not today, probably. Not today. Vince, what are your thoughts here?
Yeah, so very, very similar situation here to the S&Ps. I'm hoping that we get a rotation up here to settlement. I would like to see 17,539 get targeted, and I would love to see us get back into value from the previous day and get us back up here, maybe even test the bottom of this gap, 18,242-ish, somewhere in that range. I would love to see that happen, right? Hopefully when we open, we don't just catch a sell-off and we just keep on going.
Just keep going.
Ultimately, I would really like to see us get a little bit of a relief rally here and get us up to test the gap low at 18,425. And we do have settlement on a spike base way up here at 18,716 quarter. Market's been dropping 5%. If you remember back during COVID time, or even when the war broke out with Russia and Ukraine, the market would drop 1,000 point or 2,000 points in the Dow or whatever, and then the next day would rally up. Oh, we had the biggest gain in history, So we had the biggest sell-off in history. The next day is the biggest gain in history. So I think we're heading for that type of volatile situation where we're going to get really big swings in this market. I'm hoping it goes upside today, but I would love to see us, get up here, test settlement, get back into the value area play, and get up into this gap and try to close this gap up here.
Right,
but we got to close the overnight gap first, right? So we got to get here to 17,390. Actually, 17,540, I think is.
Vince.
Yeah, up around the 17,500.
Do me a favor.
Yeah.
I know you've heard it a million times, but a lot of folks here probably aren't familiar with what the value area special situation play is. I know that is a hypothesis that you're kind of looking at today. Would you explain what the value area special situation play is to everybody viewing?
Yeah, absolutely. So the value area plays when you open you open the day with a gap. Okay, you have an imbalance in the market, and you go and retest the value from the previous session. So you close the gap, you get acceptance back inside value from the previous day, and you rotate through value. Sometimes you'll get to value and it'll reject, right? So you got to be very careful when you get up there. But there's a good chance that if you get acceptance inside of value from the previous day, you will get a rotation up here to possibly point of control or the value high ultimately. So that's pretty much what the value area plays. Dalton, he's discounting it, but I'm still looking at it. Oh, what about you?
Oh yeah,
I still think it's valid. Honestly, it may not work as much as it used to, but it's.
I think he still looks at it. He just doesn't call it that anymore.
Gotcha.
He just doesn't call it that anymore. So, Vince, for those watching, what are those value levels? The value low from Friday and value high.
Yeah, absolutely. So first we're going to try to close the gap today if we can, if we don't start selling off right off the open. But we're going to try to close the gap at 17,540. If we get acceptance back inside of 17,600, there could be a potential rotation to 17,840 and 17,975-ish. And then we have the gap low up here at 18,250. And then we have a settlement and a spike base at 18,716. But that's quite a ways up there. But you never know. You never know. There's a lot of shorts in this market. We had it last week, right? We had that one day where, we were looking at the overnight inventory and we had a huge rally. I think it was Monday or Tuesday of last week. I forgot, but there was a big push on the one day. So let's just pray that this market doesn't open and just keep selling.
Keep tanking.
Yeah. Last night was scary. When I turned on the computer and I saw that gap down and we were down 5%, I'm like, we're going to lock limit. You know, we're limit down today, and thank God we bounced, but it's brutal.
Well, let's hope that doesn't happen today. I'm looking for
Yes.
some sort of recovery to happen so that I can start getting back involved in these, because these are not my markets. These are not when I excel. Let's take a look at crude oil now. All right, Vince.
Yep. Yeah. Let's do it.
All right. So the weekly
That's a fun
chart.
market.
I mean, for a year, it's been very range bound. 2 years even. And we broke that on the weekly chart. This is substantial. This is a pretty big breakout. You know, the market's been kind of rotating, closing in on itself. We've broken out of that last week. Let's take a quick look at the daily chart. So lots of gyration inside of that longer time frame balance. The market did show some pretty decent increases in volume upon breaking out of the longer time frame area of balance. We've added 54,000 contracts on Friday alone. New shorts coming into the marketplace. Adjustments in inventory, probably in longer time frame overall. Mostly, we're going to be seeing shorter time frame traders, probably going home flat a lot, but this increase in open interest between yesterday and between Friday and Thursday, we're looking at 66,000 new contracts to the short side. That's some pretty substantial selling coming in. It's new business. What kills me, Vince, is looking at these moving averages. How long has this balance been in play when they are all just tightly packed and right pretty much where this break came from?
Yeah.
Certainly call that braided, right? All right.
Oh, yeah. Spaghetti.
We got some demand issues, right? If we're going to be kind of entering into recession, which is one of the uncertainties and the fears that are in the markets these days, it's probably going to lower demand for crude. And also, we've got OPEC talking about increasing their productions. So a lot of things kind of piling in on the short side here in crude oil. Take a look at the 30-minute chart. We do have, there's a lot of weak structure above. We do have this in the equities as well. We've got two gaps. Lots of naked point of controls above, but we've broken a longer time frame market state. So until there's some sort of change in this, I think we're still looking for opportunities for shorts in this market. That's just again my opinion, and that's what this is all about: is just trying to seek some sort of context. Always remembering risk management and remaining patient in our trading today. Looks like we've got a weekend gap, but it's inside the range from Friday. So no real gappage. Looking like we're going to be opening in range, but below value from Friday. Did this get a little bit overdone to the downside is what it's starting to make me think, but I still, looking at the technicals and everything, I still think that we're looking for opportunities for shorts in this market. Of course, um, that's, that's opinion. We're going to see. This might be an interesting opening range trade, JD. This is the one I think we might like to take, especially if we can get it relatively cheap. Let's take another look here. For the profile on Friday was normal variation. There was a lot of probing in both directions. The market, opened, set the initial balance, looked below it, looked above it, came back inside the initial balance. Just a lot of kind of seeking two-sided trade here. And if we do fall into two-sided trade, that's going to kind of put us into balance, give us an opportunity to use range to break out rules. Not quite there yet, but we'll see what this open does for us. We get back into value from Friday. It could be a pretty decent opening range trade opportunity for us here, JD. I don't know, Vince. What do you think?
Yeah. So, well, the first thing with crude oil, why isn't my gas prices going down? They actually went up over here 10 cents. How does that work out? Crude
only
oil
goes
down
up
about what,
fast.
16%? It's down like 16% last week, right? Or something like that, 14%. And gas prices are going up. So go figure that one out. But if you go over to my charts there, I'm looking at a longer time level here on the daily around this $56 level. We're getting pretty close to it. We're at 61.08 right now. So I'm looking for this. We had this big rally up, right? We came back, we tested it. We pull back, tested it, big rally, and we keep on testing this area. We tested it back on August of 21, December of 21, May of 22. So I think this is going to be an interesting area if we get here, maybe to start loading up on some longs, maybe. But we're pretty far away, still $5 away from that area. So 56 is like a long time level I'm looking at in crude oil. If we go to the 30, like you said, Ho, we had a ton of open interest. I mean, look at the open interest that came in on Friday. 54,000 to the short side. That is huge. Where is it huge?
Huge.
So we had 10,600 on Thursday, 54,000 on Friday. Like you said, we're pretty much overnight inventory is moved, right? There's nothing there. We're actually inside of range right now. We're going to open inside of range, it looks like. We're opening in 5 more minutes, 6 more minutes. But we're outside of value still. Okay, overnight inventory. This is the overnight inventory here. So we're just sitting inside of the range. So maybe we could test this settlement. I would like to see crude oil get up here, test settlement, and try to do something. But we do have on the 30, is this high here? All right, so we haven't taken out the high of the overnight open yet. And I'm wondering to see if we reject value at, let's see here, value, we're going to rough estimate this at 61, 25, 28, so up there. If we try to get up inside of value from Friday, we can't accept in value, we can't get to settlement from Friday, and we roll over. I think I like the short side here in crude. But we got to see if we can stay below 61.25. All right. If we're staying below 61.25, I think I'm going to play the short side of this market today. But if we could get acceptance above it, I do like us testing settlement and maybe the high from Friday.
You got 61.21 is the initial balance low from Friday as well. So a little confluence there.
Okay, there you go.
Value low and IB low there.
Right.
We got our overnight high right up there as well. Looks like the overnight high we just took out, the previous overnight high was 61.18. Just traded up to 61.22. So 4 ticks through that. This is going to be an interesting opening range trade. Let's get through gold now, and we'll catch that opening range trade here. So the weekly still strong. One thing that I see on this weekly that it kind of irks me a little bit if I'm going to try and stay long is balance boxes are getting closer and closer together. If I were to place a box around the areas of balance, there's that one. There's that one. And this one, well, actually this one. Let me get this one down here. And now this one. So we're seeing the areas of balance getting closer together, indicating the momentum is slowing. The momentum is slowing. I mean, we got gold up at $3,100 here, $3,000. This is pretty expensive. Not saying it can't go any further. Of course, I think we said that when it was trading to $80 and $200 and $800, and now look where it is. But the auction seems to be slowing a little bit. If we were just to be looking at these areas of balance as they continue to get closer together, and even now maybe even starting to sit on top of each other on this weekly chart. Take a look at the daily. The daily, the upside auction is still in play here. If you were to ask me, we do see a little bit of a liquidation break, and that's what it is, because we've lost. Well, on Friday we lost 19,000 in open interest. On Thursday we lost 7,300 in open interest. So this has been a long liquidation move. It's not like new selling is coming in. Of course, you're going to see higher volume on these types of situations. However, we did see lower volume on Friday than Thursday. So this is looking more and more like a long liquidation profit taking event than anything else. You agree with that, Vince?
Absolutely. Yeah, we have decreasing volume over the last 2 sessions. So, hold on, let me go to a 30-minute so you can see it better. So we had increasing volume back on the 3rd of April, but we lost 8,700. Okay, and we had value lower, right? Overlapping the lower in the trend day, double distribution trend day. I think we had here. And then we had a lower volume and we lost 19,000. So that's a lot of contracts to lose on lower volume. So I'm thinking that that's just long liquidation, like you said. But if we zoom out a little bit on this chart, you can see this 3,000 level is a pretty important level. There's there's kind of a roadblock here. If you look at back on February 10th through February 24th, okay, you can see every time we put in this high, we would rotate and sell off and would sell off. So I think now, because what was resistance may become support, became a support zone, right? Because we came down, we bounced, we checked that 3,000 level, we bounced off. We came back to it, got to what, 2990, bounced off it, tested it 1, 2, 3, 4, 5, 6 times, and then we just kept bouncing off. So that obviously there's buyers in that spot, right?
Right.
You know, there's buyers here. Are they going to remain there? We don't know. But for right now, the buyers are there in the overnight. We are
got about a minute here before crude opens up.
Okay.
A little bit of a head and shoulders we've got going on, inverse head and shoulders here in gold, right?
Yes,
right?
I was just going to say that. So we're so I was looking at that and put on here. So we have this little pattern going on. You know, are we going to take out this neckline and break out to the upside?
All right, let's
this should be
step away from gold for a second
we...
and check in with the crude oil opening range trade here for now. All right.
Crude is about to open for business here. Crude is now open. Ding, ding, ding.
Right.
8 o'clock a.m. Central Time.
Do it.
We're looking at a 1-minute opening range in crude. Hogue, I read The Best Loser Wins twice over the weekend. Saturday morning, I went out. I took the dog for a walk, and it was on my front porch. So I plowed through it Saturday morning in a couple hours, and then I read it again yesterday, a little more slowly. So if we get on the right side of one of these opening range trades, let's try adding to it.
You're digging in, aren't you?
I'm in. I'm sold. Let's try it.
Hey, who's that trader, Hogue? You know him from the floor. He's like, you know, everybody does it all wrong. When you're winning, bet more.
Reba.
Yeah.
Greg
He's mentioned the book a couple times.
When you're winning, bet more.
All right, we've got a high of we should be in a short trade right now.
Opening range is still hasn't there. Now it just broke to the downside.
All right, we are short 160.88. We are short one crude oil 60.88.
88.
Small opening range.
Very tight, yeah.
12 ticks.
We're going to take 15 ticks of risk on this trade. Got a CYA up at 6103. That was a real tight opening range.
Yeah, it was.
Come on, crude.
Roll over.
Want to see it happen right now, immediately. Say again, Vince?
Where are we at on this? Where are we in on this?
60.88 short. 60.88 short one crude oil. 60.88.
All right. We got to get into
right
one
on top
here
of our entry price.
JD can marry this thing in honor of Tom Hoogard.
Well, if we break below 60.40, I would add.
60.40 is an add?
Yep.
We've got last
We
week's
can
low,
maintain that
Friday's
area.
low, 60.45.
Mm-hmm.
Yeah, we get below that, I would have.
Well,
Come on, crude.
Coach Vince has set the price.
Coach Vince has set the price. Needs some follow through. Want to see some follow through pretty soon here, guys.
Mm. The only thing with this crude for the last couple of weeks, the opening ranges, right? They've been really, really a slow go.
Yes, they
It
have.
has been, yeah.
Yeah.
Well, I mean, hitting that 4-year low, I mean, geez.
Yeah.
It's been a while. Last week it declined 10%.
Yeah, it was down 7-8% in one day, Eddie.
Mm.
Yeah. It took those opening range trades a long time to actually play out, though. We would chop around inside that opening range for a good half hour or so before finally breaking out. We did have a couple good winners in crude last week too, playing the opening range.
So, what's your takeaway, JD, from Best Loser Wins? I mean, Tom Hooger's got a pretty low hit rate, but when he hits, it's huge.
Yep. There was a couple of just cherry lines in that book. We're not trading to break even; we're trading to make money, and I totally agree with that. Shaving one off and letting a runner go. Yeah, that's been sort of our policy here with these opening range trades for a while. But he talks against that. Like if you're in a trade, let it go. Don't touch it. Don't lenny it, which we have a tendency to do. We have a tendency to lenny these trades.
Always been a linear.
Right. So let's try not touching them for a while, and let's try adding to our winners on these opening range trades instead of trying to pick 1 to 1, 2 to 1, 3 to 1 our targets. Let's just let them ride.
That's what Reba was so good at, man. He would get into a trade and just barrel into it, add to it. He was crazy
whole
as a
mindset,
loon, but what a trader.
Yeah. Yesterday was yesterday. It's got nothing to do with today. You lost $1,000 yesterday. You're up $1,000 now. Do you get out to cover your losses from yesterday, or are you trying to make some money? That's basically
that whole conversation he had with that trader he was talking to, right?
Yep.
So if you get out, you're just alleviating pain.
Alleviating pain. That's it. Yeah. But I'm going to read it probably 3 more times this week.
Nice. That was Tom Hugard, you said, right?
Tom Hugard. Best loser wins.
Yep.
You're a fast reader, JD.
I read quite a bit. My wife is a librarian by profession. She's always bringing stuff home.
So you kind of have to.
There you go.
Oh, there you go. You gotta stay on the good side, JD.
That's right.
Exactly.
I bought it on.
It's a quick read though. It's only like 250
Audible.
Pages.
And I'm listening to it at 2 times speed, so it's about a 3.5 hour read.
Yeah, I have it on Audible as well.
Where'd you get that? Amazon or where'd you get that?
Audible.
Yeah, Audible, Eddie.
Audible's on Prime, isn't it? Yeah, I think so, isn't it?
I don't know. It's just an app on my phone. I don't know.
Yeah. Well, I think Amazon owns it or whatever. But yeah, it's great because you can listen to it, and then they have like a PDF format, I think, of it too. So if you wanted to look at it, I think you can.
Now, if you have Prime on Amazon, you get like free books. So if you got Prime and you don't know this, look into your subscriptions on your account, and there's a lot that if you do have Prime that is available. So I didn't know this either, and I've got like 50 books I can get for free.
Yeah, use those credits.
Yeah, exactly. It's also on Spotify. There you go, Caro. I got Spotify too.
The first trading book I ever bought to listen to. I kind of prefer having the book.
Yeah.
It's nice having something to reference when you're looking for something specific. Just flip through a page instead of trying to
Yeah, they could write on it.
Yeah,
you
find
know,
the
go
right
back
spot in
to
the
it.
audiobook. I like having
Come
physical
on,
hard
dude.
copies of books also. I find it more convenient.
Yeah,
Nothing wrong with
you could write
listening
on them
to
too,
an
JD.
audiobook.
You could put notes on
Yep.
them and stuff.
You mark
Oh,
them
boy,
up,
here
yeah.
goes Creed.
Make your notes. Here we go, right back to the low of the opening range. We can see this selling volume pretty much dying out
Let's
here.
see.
Oh, there we go. There we go. Fake out.
Yeah.
Head fake. That's to get everybody. Oh, let's buy it. Let's buy it.
Was that our
Yeah.
ad right there? Was that little pop? Should that have been our re-ad or double up? See if we make a new low.
Not feeling that yet. Not feeling that yet.
Nothing's really telling us to get out of this trade yet either.
No.
I would just hold it.
With the exception of this little
What's
the
the
selling
open
volume
range
drying
high?
up here before that pop. Opening range high was 6097. 6097 opening range high.
Okay. All right.
We got a
There we
CYA up
go.
at 6103. So we're giving
Here
it
we
plenty
go,
of room.
JD. Here we go.
We'll let it fly. Little bit friendly to the upside on the ADX, but
You like looking at that ADX Hogue?
it's something I looked at a lot back in the day, and I kind of moved away from it. And then the Riz, Robert Cooney, kind of threw me some charts and reminded me, you know what, it can be helpful.
What does the ADX measure there, Hogue?
It measures participation and directional activity. So you can see it down here. This is the 3-minute bar.
Like a MACD?
Sort of. So when you've got participation above like 25, and right now the ADX is 32, and you've got the green bars above the red bars, that's saying that there's probably some buyers in here. But like everything, it's a lagging indicator. It does give false signals. Just something to keep an eye on. Very low volume right now on this 3-minute chart. I mean, look how low the volume is. Boom, boom.
Could we have a divergence in it? Does it show divergences or?
Can we switch over to Hogue's charts on the back so people can see what he's talking about? There we go.
So here's the ADX. So the ADX plus, positive DI, directional indication, is above the negative. Pretty decent participation, at least on this 3-minute chart. We're seeing some pretty low volume. I mean, look at this. This is after the open. Here's the 8 o'clock bar. There's the opening bar. The third 30-minute bar is absolutely dead. And it was an up bar. So it seems as though, and we've got, we got the plus DI lower. We've got the negative DI moving higher on some pretty decent participation. I like the short, actually. I do.
Let's go, crude. Come on, we need to break that 60-40 level. I like to get below that and hold it.
Hey.
Volume's increasing, right?
We are seeing some increasing selling volume coming in.
Was dead. The last up bar was dead. So we're getting a little bit better volume on the downside here now.
Keep talking it down, Ho. Keep talking it down. Go.
Keep talking it down. Yep.
Jerome.
Yeah, it doesn't tend to listen to me, but got the
so
come on.
Also, reading Hogarth's book, he does like to move stops to break even after a certain amount of time.
Yes.
Yeah.
But I found that we have a tendency to get wiped out if we do that. What do you think?
It
Should we wait till
irks
like
him,
3
it
to
seems,
1?
to do that. But once it
Mhm.
gets to a certain amount, he says he sees it ridiculous to lose money on a trade.
Yeah.
Right. Yeah. I'm the
Agreed.
same way. Usually 2 to 3 to 1, I'll go to break even. I can't see having
We're,
that kind of money and then you end up with a loss.
Give
we're
it
about to
back.
hit 3 to
just
1.
go.
We're about to hit 3 to 1 hour right now. Would you say this is a good time to adjust the stop?
I would. I personally, I probably would because I wouldn't want to lose after. What are we up like 300-400?
Run around 3 to 1 hour would be 45 ticks. So yeah, 450.
Yep. I would go to BE. That's me though.
All right, we'll take 5 ticks on this trade.
Touched it.
Worst case, we got a free trade on. Worst case, we make 50
Come on.
bucks.
No, let's break down right here. I'd love to see us break down right here.
Oh, that would be wonderful.
Yeah, I would.
Well, boys, we're just about out of time here on opening call, but we still got a few minutes, and just want to give you a little heads up. We got lots going on here today, and thanks for being with us here in the community, in the chat. Coming up here, we got Coach Dakota, number 5 on the big board. Coach Jay going to be joining us here for Fast Markets, and Peter Tuckman. He'll be with us here with Andre. Riker's going to join us. Rising Star, number 139 on the big board. Check out with Riker. Robert's going to be with us here, and Coach Paul going to be doing the VIP update. Coming up here at 1 o'clock, Dorm Room Traders. We're going to college, folks. Amanda with Dolby and JD. And to end the day here, we got Mo, number 26 on the big board. Mohammed's going to be with us to end the day with a big smile and a big winner. I'm not going to guarantee that, but I'm sure he's in the chat checking it out, man. Good morning, Mohammed. And we'll have that. But any last words here, guys, before we close out this opening call?
We will continue to
me-
monitor this opening range trading crude. Again, we're sitting at about 3 to 1 R on it right now. Mo says to just get out. If we're talking about a break-even stop, just cover the trade.
Can't say I disagree, but we are trying to hold these things, right?
Yeah, we are trying to hold it. So I'll let the
Does it
market
make
do the
sense?
talking. If the price action dictates that it's time to get out of this trade, we'll look at the volume, we'll look at price, and we'll look for a good exit strategy in a few minutes. But for now, we're letting this run a little bit. I'll keep you posted on that.
I think we're good.
What's that, Oak?
I think we're good on it. I honestly do.
Yeah.
You know, I've been wrong. We can't lose on it, so let's just let it go. See what happens.
Agreed.
Nice.
Make Tom Hugard. Let's make Tom
Sounds
proud.
good.
Make him proud for us. He's good. He's good.
Let's get Tom Trades watching Top Step TV. That would be great. Yeah.
Yes, right.
Let's get him on here.
Stay humble, grateful, creative, and centered in your trading today. Make sure you breathe. Pray for peace. And Paisan, leave the guns.
Hey.
Take the canoe. Order filled.
I could
All
go
right.
for one of them right about now.
Coach Vince, thanks for being with us here this morning. Great stuff.
Yeah,
and
thank you, guys.
hey, we started off this week pretty cool so far, and we're going to keep it running fast. And talking about fast markets, it's Coach Dakota, Coach Jay now. Coach Dakota cleaned up last Friday. He locked in a little over
Order
almost
filled.
$1,500 worth of profits after hosting the slow markets last night. We can't wait to hear what his thoughts were on the week ahead. Also, Coach Jay also had a nice Friday with 4.5 locked into one of his trading combines. Let's find out what the head of the Top Step VIP team, the Lunatics, is thinking about the state of the market this morning. Lots going on, lots hitting the wire. Don't go away. We're going to be back here soon, and we're going to take a little break right now. So keep it running.
Stay tuned. We'll be right back.
I promise.
Order filled.
Why Top Step? Because traders shouldn't have to risk everything to participate in the markets. And since 2012, We've provided capital to over 10,000 futures traders just like you. From the pits in Chicago to screens in over 143 countries, we've been motivated by one simple idea. We don't care who you are or where you learn to trade. If you pass TopStep's trading evaluation, you'll be invited to trade with our capital
filled.
in a fully funded account. As a TopStep funded trader, you keep 90% of profits and we take the losses. We also offer educational resources for all levels, live classes, and free group coaching from a team with over a century of professional
filled.
trading experience. We're invested in your success. So what are you waiting for? Ditch the brokerage account, start learning by doing, and become a TopStep funded trader today.
How do you manage your emotions in trading? Are you taking anything from the ski, like professionalizing your mindset to get that in the right spot that you've done over the last 20 years?
Yeah.
To do anything and bring it over to the trading world?
Yeah, I mean...
You meditate, right?
Yeah, I'm meditating, and exactly, exactly that. Because you're not going to have a great day every day in trading. Like you said, it's a love-hate business, and it's the same thing with skiing. It's a love-hate business. Not every day is going to be the most beautiful, sunny, slushy day.
Yeah.
There's a lot of days that are super icy, and you don't want to put your body on the line.
Yeah.
And
conditions of the day change and all that kind of stuff.
Exactly.
Yeah, you got to adapt. Yeah.
Exactly.
In front of you is the daily bar charts for the ES. When you look from left to right for multiple days, what?
So if I was shorting, say I wanted to short on the phone meeting 49.78, and I was like short 7.
Is important in there is that there's no indication of what I call adults in the room. When I use that statement, that means that I don't see any indication of any dominance by large institutional traders or those investment managers that hold for extended periods of time.
And an even quarter bid, half bid, the orders bid, even bid. Now the seller quarter, half, the orders, and even.
Come on, baby, come on, come on.
Order filled.
explore. All of that for this. Come on down, come on down, come on down. Yeah, that GM, I was one of the best scams I've ever seen. Jeez. Unbelievable. Come on, baby, 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 come on, baby. Let me out, let me out, let me out, let me out, let me out. Come on, how much we got?
Order filled. F that, man. F that. 511. Wow. Wow. Five 11. 511. 511. Why are you doing that way? Okay. Let's just wait. Let's just wait. It's okay. It's okay. It's okay. Now, margins at like 10.5, whatever. Strength shorts are like reaching out and putting their arms around the front, right? And let's just keep that really nice and close. Because maybe brain is margin rates, right? You tell traders don't have a managed risk. Do not have both insurance left, right, center, direction from the 960. But I took it off. Damn, that was right there, man. It couldn't get through the 9, the big wap, and the 50. And you took it off. And you took it off. And you took it off. Can you believe yourself? Can you live with yourself like that? You took it off, Antonio. 50 points, man. 60 points. You took it off. Can you dig it? Yes, it does. Yes. So, dig. Yes. On 49 in the last couple hours. You're not seeing any upsides in the dump. That's basically what's going on. Right? 45 lane right now would be a half count right bar. So they're all getting out before the kills them. The open is unpredictable. We don't know how this thing's gonna open. It can open and drop down about, down underneath 4900. We have no idea. The problem is when markets undergo material change, right? They become unpredictable. Put in my heart, money at risk. Look at what I did here. Look at what I did here. Look at what I did here. I did 371. I thought this was real. I thought all of this was real. And I was shitting boots. Brett's like, no one else. Let's go. All those practice fluids onto the line. So this is a fun and in that line. As it takes out, like say, long 5. I had a good entry, man. A 511.
And I took it on.
Order filled.
I took it up. And I have my arrows here. Look it, I have my arrows here and I didn't. Man. 7, right? What are you getting out? You're getting out plus. No, but these markets.
Order filled.
Hold up, look at you in 400 already, man. Just like that. You're like that. You're like that. Getting out. Getting out. Let's move on way. We said to look out for it. Which we are for under blue map. Look at that! Now it's at 300 from 400 and I'm gonna damn, well. Why? Why you do this? 45 seconds. What will really happen? It already took place. It would have, man, that 100 would have been nice over here, and I would have been in God's hands. Show you guys in detail. Right? I want to see that 575 on the XPX. Tesla, 239.
Some fun, boys and
we
girls.
are open. Ding, ding,
We are
ding.
Open indeed. Coach Jay, thoughts coming in. We got a gap from the overnight or the reopen yesterday. Go fill it. What are your thoughts, Jay?
So with that gap, we filled about 50%. Depends on kind of where you measure it. I have the low of the gap 17,100, the upper end of it 17,480. So we filled about 50% of that, and so we filled about 50% of that. So I'm looking to the downside, right? I think any. So I'm looking to the downside, right? I think any rallies are opportunities to sell until we really find a bottom in these markets. We've been talking about a month and a half of no bids in the equities. Does that stop today and we have a rally or what do we see here? I think, like Dakota said, stay patient, see where their opportunities are, and with the emergency Fed meeting coming up, I know we won't hear about it, but that's it's interesting.
Oh yes, it is.
We didn't have enough volatility.
I think love to know what they're talking about. Hey, Jack, welcome aboard. Happy Monday.
Oh,
We're seeing some
my
selling in the
God.
ES right now. We got some fireworks last 24 hours. Jack, what are your thoughts?